Already. Hello, everyone. Welcome back to Family Life Builders TV, where we're rebuilding homes and transforming society. My name is Tosin Opeoluwa, and on the show today, I have with me Tobiloba, Odutayo, and Rita Tosin Ailoyafen. Is that correct? Awesome. I got it. So today, they are wonderful people. We are going to be talking about something special, something beautiful that is dear to the heart of almost every child, almost every home. But it looks like we're not really talking about it. So today, they will be breaking it down to us, and they will be telling us how we can actually go about it and be free. Okay, so I'm going to start from Tobiloba. She's going to be introducing herself to us because Yoruba people will say "Ẹnu oníkan láti ń gbọ́ pọ̀n." Okay, so it means that it is from the owner of the word that you hear it best. Okay, so let's hear from there. Thank you so much, Tobiloba, and the floor is to you.
Hi, Tosin. Thank you very much for having me today. And thanks everyone watching for having me as well. My name is Tobiloba Odutayo. I was born and bred in Lagos, Nigeria. I'm a seasoned financial professional with a strong background in finance and accounting, of course. And I'm also an alumni of the prestigious University of Lagos. With a dream and few suitcases, I moved to Canada about 30 months ago with my 3 beautiful daughters and spouse. And today, I'm proud to say that I'm an independent insurance broker and financial expert, and I'm also the founder of Savvy Pro Consulting, a Canada-based firm dedicated to providing financial education to Canadians and basically managing their financial affairs. As a financial enthusiast, my role goes beyond managing people's money. It encompasses ensuring that individuals and families have a resilient financial foundation to weather any storm, right? So you can count me as the money bag, like we can help you grow your money, right? A fun fact about me, I'm an avid explorer who finds joy in traveling. I think so far in my 37 years on earth, I've been to about 37 cities or market, not countries. And I love learning new things as well. So I believe I'm here to learn from you ladies today and from my audience as well. Yeah. Again, thanks for having me. And by the way, Tosi, you are doing an awesome job on this channel. Thank you and well done.
So much. I really appreciate you both. Thank you. Thank you. So let's hear from Tosin.
Hello, viewers out there. Thank you, Tosin, for inviting Toby and I to your program. I'm one of your fans, and of course, very educating, very enlightening, very informative. Thank you, Tosin, for counting us among those who would be showcasing or having to come to discuss in your program today. And for those who are watching, I want you to also stay tuned with Tosin. Tosin always share more information to help many individuals who, one way or the other, they want to meet their own needs, depending on how it relates. But today, I want to introduce myself first of all before we start this program. I said my name is Oluwa Tosin, Tosin's namesake. My background is in land surveying. That's where I started from when I studied in Federal School of Surveying, Oyo, Nigeria. Though I'm born in Germany, but I grew up in Lagos and some parts in Abuja. Now, to the glory of God, we migrated to Canada, my family, my husband, and my 3 boys. And I thought to myself that what can I do for a start, for a fresh start, and see where I can start a business. And I thank God, God counted me among those who could reach out to family to help. How? That is to obtain a license to become a financial advisor and help people to plan help them to find strategies on how to plan their short-term, medium-term, and long-term goals. So in that light, God has opened my eyes to see more advantages in the investment and financial industry. And I'm here to share more with the world and those who will be watching. I hope you gain a lot from this program. Thank you, Tosin, for counting us among those who will be in your program today again.
Thank you so much. I really appreciate you guys. I didn't take your comment for granted. I told Toby, I said, see, this thing, I'm doing it for free. We're investing so much in doing it. So I said, sometimes I feel like families just need to get this, you know. And Toby mentioned something. She said, "We're doing it for God." You know, like it's a reward, and you know, I was encouraged. I was encouraged with that word. So I really appreciate your coming. Let's start from here. One day, there's this very wonderful guy that used to like me. Unfortunately for him, he does not have the courage to tell me that he likes me. And I'm talking about as a teenager. Eventually, someone called me and said he died. And I feel so sad about it. At this time, he was married. I got married pretty much earlier than him. We lost contact even from, you know, being a teenager then. And the person that was telling me, I said, what happened to his wife? He doesn't have a child. Or I said, what happened to his wife? That was the first question I asked. And the person told me, well, it's not about the person who died. It's about the people he's leaving behind. He said, what happened? Because he also had a mother. Another one happened, and this was also a beloved person. And, you know, there's a need to start contributing money after this person passed. This is a wonderful person to me, and I feel so sad about it. And I said, we need to do something. And I asked myself if it's possible for us to do something about this. And I started asking around that who can help me talk about life insurance and beyond life insurance, even while people are still living. Is there a way they can make money even from their life insurance investment? Is there a way they can take care of their children's school fee? Is there a way they can reduce stress in their life through life insurance? And then I contacted one of my good friends, Viola. And Viola said, oh, I know somebody. And then somebody knows somebody. And that's why we are here. So I'm going to open the floor to you and then to tell us, why do we need a life insurance? The floor is open to you.
I was actually waiting if Tosin wanted to go first, but I can say something and then Tosin can chip in as well. So to me, life insurance is a financial tool that offers peace of mind and protection. I mean, it's a way of safeguarding your assets and your own lives for the benefit of your family, right? Whether it is important for everyone to have it, I will say yes a million times, right? However, the type of life insurance an individual may want to get would depend on their individual circumstances, their financial goals, and their responsibilities. And here are some factors to consider, right? You cited an example of a friend who died, passed on without putting down anything for the spouse and what have you. So if you have people who depend on you, life insurance is a must, right? And it can provide financial support in the event life happens, because it helps to replace that income and what you're bringing into the home and to cover ongoing expenses. I just wonder why we will have to practically beg people to buy what would benefit them or their family when life happens. Also, life insurance is a way to transfer risk. Like if you have significant debts like mortgage, car loans, or other financial obligations, life insurance can be a valuable tool to ensure that your loved ones are not saddled with these financial responsibilities in case of life eventualities, right? Another factor to consider when you're thinking of life insurance is it plays a critical role in estate planning. I mean, it can provide liquidity to cover estate taxes or other costs, and it ensures that your assets can be passed on to your beneficiaries without the financial strain, right? Another factor would be if you own a business, Life insurance can be crucial to provide funds for the business to continue operating smoothly or to facilitate a buyout agreement. In businesses, if you have a key person who brings in the income or who helps your business to thrive, you can as well get a key person insurance because you have an insurable interest in that person, right? Let's look at major mortality factors, age and health. Life insurance is generally less expensive when purchased at a younger age and in good health. Yes, it might interest you to know that you can actually get a life insurance for your children as well. I mean, consider a child of 5 years old life insurance. The premium is just going to be ridiculously cheap, right? And this is something that'll be carried on for the rest of their lives. If you delay purchasing life insurance, premiums may increase or one may face difficulties in obtaining coverage if health declines. I've had lots of examples of people. I mean, it goes beyond just completing the application, and then there are several things that are being done at the back end. The underwriters would have to review, requesting for your attending physician statement to see if you're healthy. There are some threshold of coverage you'll take that your medical tests will have to be taken by the insurance company. I mean, insurance doesn't want to take a risk on someone who is not healthy. So the importance of being healthy cannot be overemphasized when you're considering life insurance. One thing I would say before I hand over to Tosin is one needs to consider individuals needs to consider their financial goals and whether life insurance or the type of life insurance will align with those goals. So if leaving a financial legacy or providing your dependents when you're no more is important to you, then I think life insurance is a very useful tool. Thank you.
Okay, I would say that Toby has said majorly what life insurance is, but I'll still want to back it up with some few words, not to make this too lengthy. The truth about it is, first of all, life insurance, like she said, it's to help you to come against any of. Hello? Okay, I was muted at a point in time. Pardon me. So, as I said, Toby had said it all. I'll still want to add to what she said. First of all, you have to think of this country you are in. If you are in Nigeria, I know most countries like Nigeria or the Asian countries, we don't consider life insurance as something that we should see as priority in our society or in our economy. But if you are in the abroad, you have to actually put that as key, the very first thing you put in consideration, because even before you get your home abroad, the first thing the owner is going to ask you for is your home insurance, because nobody wants to bear the risk. The moment there is a problem with whatever you call an asset, everybody is looking for how to avoid who's going to take the blame. So who helps to take the blame or who helps to cushion that expense is that insurance. So when we now talk about life insurance, what is most valuable to us? I used to ask everyone, is it your home? Is it your car? Is it your family? What is the most valuable? Most people don't even think of their family as an asset. And the family is the primary thing, because if there is fire on the mountain and you hear, oh, there is a riot somewhere, the first thing you think of in that your locality is your family, not even your car or your house. So what's the most thing you want to put first in place is to protect your family before you start thinking of protecting your house or your car or your jewelry or your money or whatever is most valuable to you. So that life insurance itself, it's valuable to life. And of course, if there's any unforeseen circumstance, your family is not put into debt or go around start begging. Like some people who are not in the Christian faith will say that life insurance is what will give you peace of mind, and they don't want to hear the word peace of mind. But truly, if we don't use the word peace of mind, what should we call it? What other word should we call it? It's more or less like you don't have problem. We all have problems, but you should have a solution that if this thing happens, what if it happens? What are you going to do? What's the next approach you're going to take? So you should have a backing of something to support that. Okay, if I'm not there, this is able to support. If my husband is not there, have I put in place something to support? If my wife is not there, have I put something on ground to support? It's not when there's problem, we'll not start saying, oh, we should put that in place. So that life insurance is going to stand as the reinforcement that if this hand is not there, there's something else to support it. That is how we explain life insurance.
Thank you so much, Tosin and Toby. I really appreciate you. There were things that I picked that I want us to still talk more about. But in the meantime, let's talk about what are the kind of life insurance that we have for people who are new to this.
Okay, Toby, I'll speak from here. Tosin here. So the kind of life insurance we have, they have the permanent. We have two basically in Canada, and the two we have is permanent and temporal. The permanent insurance is also in three kind of form, and I will explain. It's so there's so much to talk about, but I would say it in a layman's way. There is whole life, there is universal life, and there's also term 100. That is the permanent insurance. The permanent insurance, meaning term, when you hear term 100, that is the person is protected till 100 years old. If the person doesn't die, that money is given to the beneficiary to take care of that old or the insured, the person that was protected. So the beneficiary, of course, is now an adult, pay out that money and, of course, to pay to be given to take care of the insured. Because at that time, the insured is too old to take care of his or herself. So it's actually the insured collecting the money at the age of 100, because he or she didn't die, but the beneficiary is going to help in taking care of that aged person. Now, the whole life and the universal life, like I said, they're also permanent. But these two come with a vehicle which we describe as cash value. That's what makes it different from the term 100. It's phased out in some countries, in some developed countries, but in Canada, basically some insurance company sells it, but majorly whole life and universal life is majorly what is permanent insurance being sold now, commonly sold now. And the whole life and universal life, like I said, it has a cash value vehicle where a portion is taken out of a portion is taken, like if one pays $100, I'll use the word monthly payment. It's called premium. But as I was saying, if eventually one buys a whole life, for example, and wants to get to pay an amount of $100. I'll use $100 for example because it's quite expensive. A portion about 50, maybe $50, depending on the age of the person, might be taken out, and the balance $50 is saved. It's going into investment portfolio, and the money begins to grow. So the person doesn't pay for life. The person pays maybe for 20 years. Some people say they want to stop paying at retirement, 65, and maybe that person is actually 40 in age. That means she wants to pay for 25 years. So they pay for a period of time and they're protected for life because the money, which was the cash value, begins to grow and begins to fund the portfolio itself, the policy itself. It's too much of technicality in words, but two things, two vehicles. One is protecting you, the other portion is working towards your retirement. You're going to use it if you don't die at an early age. You're going to still enjoy your money at old age and you're protected for life until when life happens. And if life doesn't happen at 100, so the money is paid out. Now, for the term life, that's the other part. That is just saying you want to be protected, protect life for a period of time in case life happens. Oh, my child is going to school in the next 10 years. I want to in the next 4 years, but at least I want that money to be there in case life happens within 10 years. I'll pay a premium. And it's very cheap. You can get as less as $30, $40. But as Toby said earlier, it depends on one's age. So if that person is younger, it's cheaper. So I would say maybe 35-year-old female, she's going to pay about maybe $30 for a 10-year period. So that's how it is, term or permanent.
If I can add to what Tosin has just said, not to re-echo, just to summarize basically, Term insurance provides coverage for a specific term, like we have 10, term 10, term 20, or term 30. So this pays out a death benefit only if the insured person passes on during the term of the policy. To better put context to this, so if you take a term 10 policy, that means the insured is only covered for a period of 10 years. And the same if you take it 20 years and if you take it 30 years. As the name implies, term, so it's temporarily in nature. It's designed to provide financial protection for beneficiaries in the event life happens, and it is very, very cheap. It is more affordable than permanent insurance. A 35-year-old female could get a term insurance coverage of like 500,000 for less than 50 Canadian dollars every month. So it is that cheap. So insurance is inexpensive. It is only just that people are not educated enough to know about this. So they just feel like, I don't want to talk about insurance now. That's not my priority. I used to tell people, let insurance be a basic need. Like when you're thinking of your mortgage, you're thinking of your monthly expenses, incorporate insurance into that because you actually need it to protect your family. And some common uses of term insurance would be income replacement for dependents. You're working, bringing on the income. If life happens, that income ceases to come in again. So your term insurance would replace that income. Another example would paying off a mortgage or other debts. A typical amortization period or usual amortization period is 25 years. If you need an insurance to protect you for the purpose of that of owning a house, you could get a term 30 insurance, right, which would significantly cover the mortgage balance for the period of that amortization period as well. And term insurance could also be used to provide for children's education expenses, right? And Tosin also mentioned about permanent insurance. Permanent insurance provides coverage for the entire lifetime of the insured, usually till age 100. And it's important to know that it's very expensive, and that's because it has a cash value component that can grow over time and can serve as an investment strategy within a tax efficient environment. Let me tell you something. In Canada today, people don't like paying taxes, right? No, I wouldn't say they don't like paying taxes, for lack of a better word. People pay taxes, right? But if they can find a way to avoid their taxes, while we know that evasion is not even an option at all, right? Another way to avoid paying taxes on your investment is putting it in a life insurance environment. And there are strategies in which you can withdraw to avoid paying taxes on that investment, right? So investment in a permanent life insurance basically grows tax-free, and it eliminates the need for a contribution room consideration. We have investment types in Canada where you need contribution room for every investment you want to take on, right? Otherwise, if you do not have the contribution room, you have to consider using what we call a non-registered account, that for whatever return on investment you get on your non-registered account, of course, you have to pay taxes on those, right? Like I said earlier, premium on a permanent life insurance are generally higher than a term insurance. And you can access the cash value in your permanent life insurance directly, or taking a policy loan, or borrowing against the policy during the policy's lifetime. And some common uses of permanent life insurance includes estate planning to cover potential estate taxes, right? No one knows where life would happen. So a permanent life insurance, because it lasts for a lifetime, is a very good estate planning tool. If you're thinking of leaving a financial legacy for your dependents, yes, a permanent life insurance is very suitable to do that. If you're looking for a long-term income replacement, or you want to build cash value for future needs. It's also important to know that within permanent life insurance, which Tosin has explained, we have two different types. That's the whole life insurance and the universal life. I'm just going to touch base on it because I don't want to make it too I don't want to go into the complexity by getting our audience confused. All life insurance provides a guaranteed death benefits and cash value. Premiums in a whole life insurance remains level for the life of the policy, and then the cash value grows at a guaranteed rate. So mark the word guaranteed rate, right? While the universal life insurance, on the other hand, it offers flexibilities in premium payments and death benefits, right? So it's highly flexible. It allows policyholders to adjust the death benefits and premium payments over time. That's what whole life doesn't give, but however, that one is guaranteed, right? Cash value growth in a universal life can fluctuate based on the performance of the investment. So, as a policy holder, you have the flexibility to actually choose your portfolios, your investment portfolios, in a universal life insurance. And I always tell to clients the choice between whether you want a term insurance and permanent life insurance depends on your individual needs. So we do run what we call financial needs analysis, which encompasses 4 different factors. That includes the amount of the debt you're currently carrying. And when we are considering the debt the individual carries, we factor in the funeral expense as well, because that's a debt when someone eventually passes on for the dependents to bear, right? We factor in your income amounts, current income amounts, and how many years of replacement you're looking at. We factor in your mortgage balance. And then the last one is the education and childcare cost. So we call that the DINE method, DINE method, right? We also look at your budget, your affordability, right? How much can you afford on a monthly basis to get this insurance? And above all, we consider the financial goals of the individual, right? So that's are the major factors we look at when we are thinking of, okay, which exactly suits this person's unique needs. Some individuals may even choose a combination of both. I mean, you have in one policy, it can be layered to include both permanent and term insurance. So I want to take, I am in need of a 1 million coverage. However, I still need something to pass on to my legacy or my children when life eventually happens, which I don't know of. So I could do a combination of permanent 200,000 and with a combination of term, maybe term 30 or term 20, 800,000. So what that means is I'm covered for 1 million coverage at the initial start of the policy, right? Eventually, I have 200,000 to pass on to my legacy, to pass on to my children at any time life happens in the future. So the combination of both would address different aspects of each individual's financial plan, basically. Yeah.
Much. Thank you, thank you, thank you, thank you. I just want to say that um, this is, a serious opportunity for those who are thinking, well, I'm okay. Everything is right. When you mention something like you can actually use some of the money you can get a loan actually. So when you start talking about that, I remember this book that I read, What Will the Rockefeller Do? I really love that book and it opened my eyes to, so many things. And then when we're talking about, generational wealth, people think we love to pray as Christians. Abraham, blessings are mine, But some of these people that have generational wealth don't even know God. They don't even know who Abraham is. But these are the things, what you're talking about today are some of the things that these people, they did. Now, I want you to talk about most Nigerians, we love building houses. Nigerian people, I'm building here, I'm building here, I'm building here. And, tell us which one is better, life insurance or real estate? Maybe we can convince somebody.
Okay, let me come in here. So, Toby, who's the technical person, that's why I called her to join us here. She will explain better. But I'll say this quick. Real estate is good, life insurance is good. But it's more or less like you saying you want to build a house and there is no foundation to hold it, that if it shakes, the house will crumble. So life insurance must be in place even when you want to build a house. So in case the house even crumbles, you still have the life insurance. So in the light of, okay, if you want to build a house, it's good because that's more or less like you are building equity. So it all depends. Like I said, you look at the system, what economy you are in. If you are in abroad and you're saying you want to build a house and you don't have that insurance in place, you're going to run into trouble. Okay, you want to go into building estates because you have that fund, you have large fund, and you want to use your real estate as a means of also bringing in more money. That's good, but you still need life insurance in case that house crumbles or it burns or flood takes away the house or the houses or the estate. What do you do? It's still life insurance. So it works together with almost everything. In fact, abroad, where we live in a credit society, not a cashless society. We're talking about Canada or America or where I'm saying UK. You can't tell them that you don't have life insurance and you have assets. Those assets will go into ruins. You lose everything. So what have you invested? Nothing. So the insurance itself should be in place. So in case any, like I said, unforeseen circumstances happen, and then you can still be in your safe havens. So, real estate itself is more or less like equity because if you're going to buy a house of, let's say, the worth of 450, you're not going to put that whole money down. First of all, you're going to show if you're credit worthy and then you'll be approved in buying the house. So even when you want to buy the house, you're, you're still going to be asked for a mortgage insurance. Mortgage insurance now, what kind of insurance are they asking for? They're also going to ask for your life insurance because that's an asset, meaning that if you cannot pay that $450,000 in case life happens within 25 years or 30 years, depending on the mortgage, the time you're going to pay that house off, they want that money, the whole family lose the house. And what is left? The equity. Equity is okay, you've paid for the house maybe for 10 years, and maybe the worth of the mortgage you're paying monthly was about 2,000. So times 10 years, that's about is it 200,000 or so? So that's what you take back. But but one will actually lose the house. So you're just going with your equity. And you of course you pay taxes for because that house has valued. So there's but your life insurance itself will help you save the house is paid off, and the balance is staying with the family depending on where you got the insurance from. Now, if you got insurance from the bank, it's not the same. If you got insurance from directly from the insurance company, yes, because the bank itself is not an insurance company. The bank itself also insures themselves. So in case they crumble, they also go to get money from the insurance company. So you getting your own from the bank is more or less like you are saving two things, your house and the balance of your insurance. So if the house was 450, you got a mortgage of 450, you didn't finish paying for the house, yes, and the balance to be paid for the mortgage is about 50,000, depending on how many years remain, maybe 5 years. That mortgage is paid off 50,000, and the balance of 450 is 400. Stays with the family, and the house also stays with the family. So one should know where they are getting their insurance from, so they don't say, "Ah, I paid for the house," and where is the balance of the money? That's where I'm coming from. So having houses is good, but you still have to sustain it or make sure that house is protected with your insurance. Toby, I think you can help us with more technical
Thank
ones.
you.
Okay, thanks, Tosin. So, mine, I think someone is yet. Thanks, Tosin. So, Tosin mentioned the concept of, she mentioned what would do a book she read called titled "What Would the Rockefellers Do?" So that's one book I read when I started studying to get my license in Canada as well. Someone shared it with me, and I kind of find it very interesting and educative, in the sense that I didn't even know like a strategy existed that you could have your own bank in Canada. And that strategy is the concept we call infinite banking, which the Rockefellers used as their own personal bank, right? So the infinite banking is like a unique and innovative financial strategy that leverages a specifically structured permanent life insurance, has a powerful tool for personal finance, which I've talked about the advantages of having a permanent life insurance, in the sense that it transforms transforms life insurance into a multifaceted instrument and provides not only this, but also serving as a source of financing and wealth building. So for everyone out there, please just go online, read about concept of infinite banking, and then you will know that, okay, using a permanent life insurance is actually a very good strategy for you to build wealth and for you to actually, create valuable wealth for yourself and family, and also passing on that legacy to your family. So back to the question, real estate or insurance, which one is best, right? With regards to real estate, I would say that two different ones is just like you comparing two different financial tools with two distinct purposes and characteristics, right? The choice between them actually depends on individual preference, your financial goals, your risk tolerance, and perhaps your personal circumstances. So let's take a look at real estate. Real estate provides a tangible assets that you can use to generate income from, and it also has the potential to appreciate over time. It increases your net worth, right? It can be a valuable addition to a diversified investment portfolio, right? And you can purchase for rental purposes or maybe use Airbnb for you to generate passive stream of income, right? However, there are some drawbacks as well to investing in real estate, which you have to be watchful of. If you're looking for a liquid investment, real estate would not provide that because it becomes very challenging when you want to convert it to quick cash, right? Property ownership as well. So if you're the very busy type, property ownership involves responsibilities such as maintenance, dealing with tenants, and property management. You need to be very careful, especially if you're living in the province of Ontario when dealing with clients in Canada, right? Also, it stands market risk. Real estate values can fluctuate based on economic condition and market trends, like what's happening in today's world, right? Interest rates is really high. Home equity has really gone down. So you have to be very watchful of that as well. Some upfront costs, like if you want to acquire real estate, it typically involves significant upfront costs. Sorry, I don't know why I'm stammering, because it includes a down payment that doesn't come like cheap, and also some closing costs and ongoing expenses. So those are the things you need to put into consideration if you have to. You just have to weigh the pros and cons and see if it is a valuable use for you or not. And yeah, going back to use permanent life insurance, it provides coverage for your lifetime, ensuring that that benefit is paid out to your beneficiaries. You can actually structure it as an infinite banking as well. That's if you fund your policy very well, it could serve as a bank for you where you can access cash at any point in time you need it, and you are actually protected as well. And major tax advantage, the cash value growth is generally tax deferred, and death benefits are tax free. And again, it is creditor protected, right? So except only if it is used as a collateral loan or you borrow against it, that's only when creditors would have access to your permanent life insurance should in case life happens. The major drawback I see with the permanent life insurance is the higher premium, honestly, compared to a term insurance. And that's why it's suitable for only, now I'm bolding my only, for those who want to use it as an investment strategy. So if you have a need for protection, I repeat again, term insurance would be your best bet, right? But if you want to use an insurance as an investment strategy, then go for permanent life insurance. It can be quite complex, and understanding the different types like whole life universal, we just summarized it here. In fact, if we had to dive into looking at all of the projections, doing some simulations and working through it, it's quite complex, right? And it requires careful consideration. And again, I say it is not necessary for everyone. Some individuals may not need lifetime coverage or the cash value component, so they may find term insurance more suitable. Ultimately, the choice to choose between whether real estate or the other one, permanent life insurance, depends on individual circumstances, their goals and preferences. And that's what I would always say. It's very important to carefully evaluate both options in the context of one's overall financial plan. So to cap it all, when I'm meeting with a client, I would give them objective advice, financial advice. And I expect my clients to make sound financial decisions based on my objective advice. I mean, options. I don't enforce like one solution on the client. We've met and discussed, and I've analyzed your financial needs. We've looked into your financial goals. We've evaluated your financial goals and map out strategies for you. And we discussed the different options laid out. And I mean, I allow you make a sound financial decision based on your preferences. Thank you.
Thank you so much. I want to appreciate anyone who is joining us for the first time. Don't forget to subscribe, like, and share this video. This is very essential. And like I used to tell people, don't just share. Tell somebody about it. Even if you don't click that share button, tell somebody about this. And you also take action. So it's time to take action. I want you to tell people, how can they take action? How can they find you? Before we go back to talking about business life insurance or key person insurance, I want you to tell us more about that. But how can they take action? How can they find you?
So, like you said, you asked business life insurance or key person insurance. It all depends. For a business, it could be small, it could be a big one, but most cases I would want to talk about the business life insurance, the small one. If one is setting up a business, and of course, there are some expenses that have been put in place. You have an office, you have the tools, you have your staffs, and all that in place. So you have to put all those in consideration. What if anything happens? What is going to be the case of the expenses you put in place to set up that business? So you have that business life insurance, the business life insurance to back up and protect the business itself. And for the case of a key person insurance is when you have the major person who's making that business to flourish, as in who's bringing in the money into the company in terms of, okay, he's rendering his services, and if he's not there, that's the function of that office cannot run. Or if she's not there, that business cannot run. It's actually the life source of that company. So you have to buy a key person insurance in case if this person decides to leave or if life happens to that key person in your company. How will you hurriedly get somebody to be in place to make sure that at least money is still rolling into that company and the company is still in force and you have that sustainability of your business. So that insurance for key person is going to help that business at least to still be in the market until you get someone else to come into play that role as a key person for the company. Um, I would like to give the floor to Toby to talk about it too.
Okay. Thanks, Tosin. Just to add to what you've said, business life insurance is a type of life insurance policy that a business purchases on the lives of its owners, partners, or key executives. So in the event life happens of one of these individuals, the business receives a death benefit that can be used to address financial concerns arising from the loss of that executive. So there are several purposes in which a business may want to get a business life insurance or a business insurance in this case. We have the buy and sell agreement. So a business insurance is commonly used to fund buy and sell agreements. So in the case of the death of a business owner, the insurance proceeds can be used to buy the deceased owner's shares from their estates, basically. And also it can be used as debt protection to protect the business from the financial impact of loans or debts for which the deceased individual was a guarantor, right? Major benefits are: one, financial protection. It provides financial protection for the business in the event of death of a key individual, and it facilitates business continuity. So it helps ensure the smooth transition of business ownership in the face of unseen circumstances. And the key person insurance, on the other hand, as Tosin explained, is a policy taken out by a business on the life of a key employee. mark my word, key employee or employees with whose skills, knowledge, or leadership are crucial to the company's success. And the business, so when the business takes the policy on that key person, the business is the beneficiary of such person. So if this person passes on, the business gets the payout from the insurance policy. It's also used for financial protection. In the event of death of the key person, the insurance provides funds to help the business recover from the financial impact of losing that key contributor. And then it can be used to recruit and train a replacement or to compensate for the temporary loss of revenue, basically. And the major benefit is financial security, provides that security to the business, helping it to withstand the potential economic consequences of losing a key employee. And also it enhances the business creditworthiness, as lenders may actually view the insurance coverage as a form of risk mitigation strategy, basically. So in the realm of business risk management, both business insurance and key person insurance plays a pivotal role. So business insurance safeguards the business, offering financial protection, while the key person insurance protects the business should in case they lose a key employee in the business.
Thank you so much. I really want to celebrate both of you, Toby and Tosin. I really appreciate you coming. Is there any other thing you want to share before you tell people how they can get you? Maybe on social media, or how do you want them to talk to you? In case someone is excited and say, I want to know more about that. And then also, I remember I put a question here also, where can Nigerians go? If, maybe someone is listening from Nigeria and they are thinking, okay, or maybe a pastor saw this, because I'm going to send it to all my pastor friends. And maybe when the pastor see this and say, okay, what can my members do?
Okay, so because you mentioned the Christian Fridge right now, I'm just quickly going to share this. So basically, as a believer in Christ, being an insurance broker, I've come across several clients who told me, by the grace of God, I shall not die, but live to declare the works of God. I don't need insurance. We get several objections when we try to educate clients on the need for financial protection. And I just want to say this. My faith in Christ serve as the foundation of my values and decisions. So it even extends to matters of financial planning. For me, I see life insurance not only as a practical means of providing for my loved ones in times of need, but also as a reflection of my faith-based commitments to stewardship and responsibilities. I'm a mother, I'm a wife, I'm a sister. In fact, I'm an auntie, I'm everything, right? So the Bible encourages us, and this is for my sisters, for my Christian sisters and brothers, right? The Bible encourages, and for everyone, and to everyone listening to me, whether you're a Muslim, whatever you worship, right? My Bible encourages me to plan wisely for the future. And life insurance in this context becomes a tangible expression of that wisdom. It allows me to fulfill my duty to protect and provide for my family, aligning with the Christian principles of love, responsibility, and foresight, of course. So in terms of uncertainty, life insurance becomes a tool that mirrors my trust in God's grace. It offers me a tangible way to care for those I cherish most, even beyond the bounds of my earthly journey. So I'm saying it to everyone, if you do not have a life insurance, as at now that you're listening to me, please, wherever you are, whether you're in Nigeria, yes, I know that Nigerian folks, they are not so, they really don't value life insurance, but at this point, you need to go back to your drawing board and have a rethink. And for those of us in the Western world, it is as important as the food you eat, and the shelter you are in. Life insurance is a must. I say it is a must for everyone. You need it if you love your family. Yes. And yes, I'm based in Canada, and my social media handles is Savvy Pro Consulting. At Savvy, you can find me on Instagram. You can find me on Facebook at Savvy Pro Consulting, and on TikTok at Savvy Pro underscore consulting. And you can also visit my website, www.savvyproconsulting.ca. Yes, you can contact us through, we have a contact us form on the website, chat us on Instagram, and yes, I'll be more than happy, myself and my team will be more than happy to take you on a financial cruise. Right. So thank you. I'm handing it over to Tosin.
Thank
Thank
you
you.
so much, Toby. Thank you.
So thank you, Toby, and thank you, Tosin. Not to take much of your time, I would be very frank with you that not too many people like to hear about insurance, because immediately they hear about insurance, they think of death. It's only those who die that don't benefit, and those who are left behind to benefit. So why bother? Let them sort themselves. Not so. I wouldn't want, I've always thought, what had my father? He's late now, may his soul rest in peace. But it's more or less like he's still here with me because he left a legacy for me. And that got me to reflect on God's word in Proverbs 13:22. That a good man leaves an inheritance for his children. How do you want to live? How do you want your children to remember you? Because really, yes, that person at least left this legacy for me and I'm not suffering. So for me, I would say that my father had left a legacy for me, and that's what had brought me to do what I'm doing today. And I said, I might start small, investing so little, but tomorrow, who knows when God will call you? And how do you want your children to remember you? Or how do you want your loved one to remember you? Death does not know any age. That's the truth. As people are being born, people are also dying. So all these things that we say, yes, it's vanity. But those who are left on earth are the ones that will carry the burden. And how do you want them to solve those problems? Is what you've left behind for them to remember you, to have peace of mind. And that's the peace of mind I'm talking about. That at least you're not here, but your family, you know you are in the next place. And at least your family are happy here. They have peace of mind, not worrying who's going to help or how are they going to solve your problem. So try to reach out to a financial advisor or a life insurance agent and discuss let them know your needs analysis, your goals. Let them know your long-term plans. Let them know your financial strength, because that's where it starts from. What are you protecting? First of all, your family is first, yourself, because you can't say you want to save your child when you've never saved yourself. You have to protect yourself first, then start protecting those who are your loved ones. And then we leave the rest to God to help us as we continue to invest. We live long and we eat the fruit of our labor. We can use that life insurance too, as we said, to work towards our retirement. Look out for the closest financial advisor you can speak with, because having a financial advisor, I used to tell my clients that it's like having a doctor, because you're going to disclose your personal financial lifestyle to them. And not too many people like to disclose that. They take it too personal. So meet someone that you know you can trust and you can disclose what are your assets, what you want to let them know about your family, and then they can plan for you and give you good strategies towards your future or the future of your family. Because family itself is your key asset. I always say the family is your key asset. So if you want to reach out to me, you can find me on LinkedIn, on Facebook. Just type in my name as you see here, ready to always listen, and we can draw out a financial needs analysis to see how we can protect our assets and plan towards our retirement. Thank you, Tosin, and thank you, Toby.
Thank you so much. I just want to say I'm grateful for the both of you. A story comes to mind, and I'm going to be wrapping up with this story. And I'm going to let Toby say one or two things. I'm going to quickly share this story. I attended a funeral of one of my friend's dad. And during the preparation, actually before the funeral, I think while they were preparing for the funeral. And the picture is so clear to me till today. And I went to their kitchen and I was speaking with one of the children of the deceased, and she said something. She said it in Yoruba. I'll try and interpret it. She said, Ọlọ́run mà ló sọ pé mọ́mì wa kọ́ ló kú báyìí, because tó bá pé mọ́mì wa ló kú báyìí, báwo la ṣe máa survive? Right? Our dad died. They haven't buried him, but he left no memory for that girl, for that young lady to hold on to. She said, because taba ni pé a need nǹkan sìn, daddy wa sọ pé ibo ni káwọn ti rí. So when these children, when they have a need, their dad will say, where will I get it? Go to your mother. So it's the mother that has been taking care of these children. And the Bible says a good man leaveth inheritance for his children, not even the children. One of the ways by which we can actually leave an inheritance for the children is actually by having this long-term permanent insurance. Is that what you call it? They also call one universal index universal life. These are the ways. And it's painful that many of our pastors are aware of this. And I'm so sorry to say this. As we emphasize tithes to the people, can we also emphasize that people get life insurance so that they can leave an inheritance for the children? And I mean the permanent term, so that people don't have to keep borrowing. In fact, it will reduce the burden on the church, because when people have need, they can actually go borrow from their permanent life insurance and use it to take care of needs instead of coming to church to ask you for something. Please. God will help us. My mom, some years ago, maybe 4 or 5 years ago, they sold a particular house in Lagos, at Lagos Market. You know who owns the house? My great grandpa on my mother's side. Right? So my great grandpa left it for my grandma, and then my grandma left it to our children, which is my mom. So 3 generations, they have something to point to. We can do this, and we can do better in the body of Christ, because God has provided us with this wonderful wisdom that we can draw from. I pray God will help us. Tobi, I yield to you.
Amen. May God help us. That's important. So yeah, I just wanted to mention this. There are also other types of insurance beyond life insurance. I know yesterday we are talking about life insurance, but I feel it's important I state it here. Like we have the health insurance that actually steps in to safeguard individuals from the financial burdens associated with medical expenses. So it's also important to have that in place. For instance, if you do not have an employer paid or employer sponsored health insurance, get an individual health insurance, right? Medical costs in Canada, where we are right now, does not entirely cover all your medical expenses. So you don't want to be paying outrageous bill, like dipping into your income or your savings to cater for this medical expenses. Another one we have is disability insurance that actually serves as a crucial safety net. It offers financial support in the event of disability and ensuring continuity of income during challenging times. So disability insurance is another useful tool. We have critical illness insurance. It offers protection should, in case of a serious health condition such as cancer, heart attack, stroke, and so on. And this insurance provides a lump sum payment upon the diagnosis of a covered illness, offering financial support to cover medical expenses and other related costs. So it could be added into your life insurance policy as a rider. Also, disability insurance can be added in as a rider. So it's going to be a bundled package, right? Travel insurance. This also cannot be overemphasized. If you have relatives coming into Canada, United States, or if you're even traveling out of your familiar territory, travel insurance provides coverage for unexpected events when on a trip, such as trip cancellation, medical emergencies, and so on. Auto insurance. In my country, auto insurance is mandated, right? So it protects protection against car accidents, offering coverage for damages and liability. And then we also have home insurance or tenant insurance. So it covers one's dwelling and possession, providing reassurance against fire, theft, and natural disaster. So to everyone watching, to everyone listening, I am encouraging you today to regularly review your financial needs. Always go back to the drawing board to review your financial goals. Also review your life insurance policies if you already have one. And if you don't have one, you're considering taking one, please from time to time review it, especially when major life events happens, like you just newly got married, the birth of a child, or you've bought a new home. It's important to update it to ensure that your coverage aligns with your current needs. Thank you.
Thank you so much. Thank you so much. I'm going to bring all of us together so that we can see. All right. So I want to really say a big thank you to everyone for watching. This is powerful. And I want to say thank you. Thank you so much. Thank you, Toby. Thank you, Tosin. Do you have any other thing you'd like to say to people? All right, so go follow Toby, go follow Tosin, and I will see you next time. Thank you so much. I don't know how to thank you enough, because if we have to make this a seminar, I guess we are going to collect $100 from everyone. Thank you guys. I really appreciate you. Bye bye.
Thank you.